welcome to this edition of Closing Trades with me, Aisha Faridi, Nikunj Dalmia in the studios. And finally, some amount of pickup actually for the markets. I mean, not to say that we are out of the woods or have, snapped the range on the upper end. No, not quite, not yet. But we're at least attempting a comeback and a hold above that 19,400 mark. In fact, just a short while back, we were even well above that 19,450 print. But what's changed from yesterday to today, it's actually banks which are making some amount of recovery. So look at a federal bank that's actually holding up in trade. Axis has made a smart move of about 2% today. SBI, after many days of actually languishing in underperformance, that's finally climbed up about 1.5%. And that can be said about ICICI Bank as well, which has made a move of about almost 1.5% or so. But once again, the traction and action continues in the broader markets. That's where the stars are. SunTV is spiked up almost 5% as we speak right now. Federal Bank, like I already pointed out, there's a HAL as well, which is climbing up another 3.6% in the green. There's Crompton, which is holding out well, and Indian Hotels as well, which is looking extremely strong in trade. That also looking up by about 3.5%. Today, it's the Adani names, which are languishing. Adani Enterprises, Ports, both in the red. Torrent Pharma in the red, about 1.5%. United Spirits, Coforge, they are the ones which are a bit of a drag. So, yeah, pretty much the same story continues.
Yeah, the same story with the same script, but the different narrative in terms of banks. That's the only change, if you frankly ask me. I mean, now rather than looking at 3:30, we should look at 6:30. That's the time.
Nice one.
So it's a much better idea to look at 6:30 rather than 3:30 today. That's the time the Chandrayaan landing hopefully would have been over. And I think in the market also everybody would be saying the same thing. Look at 3:30. Don't look at 3:30, look at 6:30. Look at the market. On an index of 65,000, you've seen a range of just about 1,000 points. You're not going to be in this range forever. But can you be in the extended range for another 10-15 days, Kunal? That's the point. Are we in this no trade zone? You don't have to trade for the sake of trading.
Correct.
And if you're in a no trade zone, you will find it difficult to make money both ways. So is it better off giving markets a skip and look at 6:30 or 3:30?
Yeah, I think for
6:05.
By the time the whole process would have finished and by the time we would have celebrated.
Yeah.
No, that's fair enough, Nikunj. On assessment on the markets, it's not been a fair condition for the markets to try and trade and then garner trend. No, we've been, I think, correcting some 700 points, 600 points on the Nifty, and that's happened over the last 20 trading sessions. So, that average of that is very, very small when you look at it on a regular basis. But I think the action is more towards the mid caps and small caps. Even on a day like today, yes, the Bank Nifty has done exceptionally well, but you see the slew of mid caps and small caps outperforming, showing signs of double-digit gains, and the number is succeeding day by day. So I think that's where a short-term trader would be focusing on. 50-point gain on the Nifty, I would still not be too much enthused into converting the sell call towards maybe squaring off. My indicators, the indicators on the daily charts are still into a negative territory for the index, the Nifty that's specifically. So I would still maintain that negative stance on the Nifty. However, no negative stance on the Bank Nifty, that's what I've maintained.
Vinay, hi, afternoon. Do you also see that there could be a meaningful comeback in the offing for banks, begun their move today?
Yeah, so breadth of the market is quite positive. Nifty Midcap index is at all-time high. Small cap index is at the highest point of the current rally, and advanced decline ratio. So these indicators are giving a lot of opportunities to the traders, and breadth is very strong. And the Nifty is just few points away from its breakout point 19,500, which we have where we saw call writing in last few days. So 19,500 is a strong resistance. There is a downward sloping trend line also. So once we see Nifty sustaining above 19,500, then we can see focus shifting towards the large cap also, and some stocks are showing strength today in large cap segment also. So I am expecting a breakout sooner than later. It will happen today or tomorrow, but 19,500 is very near, and I'm expecting that breakout will come on the upside only. And once that 19,500 will be taken out, I think after that we can expect immediate movement of 200 to 300 points on the upside. So yes, I am bullish on the market looking at the scenario, and derivative point of view also, we have not seen any negative development in last 3 days, and markets were consolidating, and it is about to break out on the higher side only.
Right, okay. Let's also welcome on board Sudeep Bandopadhyay, find out what he's making of the market. Sudeep, I know it's all roads today lead to the moon. Hopefully, fingers crossed on that one. And the market as well is not doing a whole lot, right? What's the message out there? Don't try and be brave. Don't try and trade just about every day or make a move every day in the market. Just sit tight on your investments.
Well, Aisha, the way I look at it, market has did quite a bit over the last few months. I think we need to give time for the market to consolidate a bit also. Of course, there is a accumulation of multiple factors in US interest rates going up, particularly 10-year yield moving up has led to a little bit of risk aversion amongst global investors. And in the month of August, they have been pulling some money out of India. Emerging market funds are not getting the kind of inflows they were getting globally. India dedicated funds still are getting inflows, but much lower compared to what they were getting in the month of June, July this year earlier. So obviously there's a little bit of profit booking, or you can say less investments coming into India from outside. That has led to a bit of a consolidation in our markets. It may not be a bad thing for the markets to consolidate after having moved up so much. The breakout probably will come only when there are fresh triggers, and those triggers can come out of Jackson Hole meeting commentary of US Fed chair on Friday, or it can happen with news of concrete news of monsoons, good progress, and delivering the right amount of rainfall across the country so that the cultivation of the next round of crops doesn't suffer. Some good news have to come to the market before we can decisively move up. I also must mention the China factor here. While today we have seen some excitement around metals in the expectation of stimulus coming in China, but the fact remains the challenges in China are humongous. And if Chinese economy doesn't do well, and actually Chinese economy, there is a major challenge. I think it doesn't augur well for the world economy, and in turn I think India also will have a little bit of challenges here and there. We will probably be the least affected economy because of China's challenges, but still I think we will have the headwinds in multiple sectors. We have seen what's happening in chemicals and specialty chemicals. We have seen what happens in metals when Chinese markets are down, and a whole lot of other things will face challenges. Yes, we will have better input costs for our manufacturing industry by and large, but the challenges will be there. So I think a bit of consolidation, bit of pause is what is happening in the market at this stage, and it may not be bad from a medium to long-term point of view.
Okay, that's only power. Suzlon, JP Power, Ratan India Power, you got Reliance Power. Seriously, these are companies, some of them don't have operating units. I'm not getting into details of it, but they don't have operating units. And when that happens, you got to say that that 440 power where you need to have the danger sign outside. Okay, I'm not done with the list. Suzlon, JP Power, you've got Reliance Power, you've got price action, which is there even in GVK. Now, some of these companies, in a sense, have gone through the NCLT route. They don't exist. There is no operational capacity. But markets are markets. There can be sometimes excitement. There can be mania. There can be euphoria. I think right now there is this lot of FOMO which is there in the power sector. So, fundamentally, what's the logic in buying power now? Or power stocks, rather?
Well, I won't buy any of the stocks probably which you are discussing, but I find a strong logic in buying an NTPC or a Tata Power. NTPC being the largest power utility in the country, and they have pivoted very well from a traditional energy to also a green energy power generator. They have fantastic back-end and front-end integration, and the performance has been consistently improving. The price also has moved up. No doubt about that. But if somebody is taking a long-term view, power is, as you rightly said, it's a utility. It's an annuity business, and the way they are pivoting towards green energy, I think, does augur well. Of course, there is a possibility of spin-off and corporate restructuring whereby value can be unlocked. And I think NTPC, that's the reason why it has been on my list for a long time, and I continue to keep it in my list for a buy for a long-term hold. Tata Power also pretty much the same thing has happened. The pivot for the green energy, new energy is happening. They are moving rapidly in that direction. a bit of challenges which they faced in the previous years are to an extent thing of the past. So yes, at current level for a 1 year plus hold, even Tata Power is good. I won't buy GVK Power, Reliance Power, and some of the other stocks you mentioned. I will not get into those speculative realm.
Let's shift focus to the countdown. It's less than 3.5 hours to the moon landing for Chandrayaan 3. Let's see where it goes today. Fingers crossed on that one. But did you know that a lot of Indian companies and a lot of startups as well are in focus with the government's now push aiding this particular sector? So let me take it across to Sharad and get us the entire picture on which are the startups which have actually contributed to Chandrayaan 3. Sharad?
Well, yes, in focus we are having the Indian space agencies as well as the startups, and the most important thing is the increased focus coming on the satellite launch services. Now, the important thing which is the synergies which will be there between the startups as well as ISRO is the costing part, and of course more technical collaborations are expected to happen. And whenever there is a better costing for the projects, then the entire mission cost, they come down, and do remember they come at a fraction of cost of what the international agencies offer. And overall even the government push has been there coming for the space tech. And the question arises, how has the funding been there for the space techs? And over the years, if we see, the funding has actually picked up. And from 2020, there were only just 21 odd startups in the space tech space, and now that has increased to almost 150 startups till date of 2023. And in the funding numbers also, you look at it, it has been very promising, and currently almost $200 million plus of funding has been seen over the last 18 odd months. Now, apart from the funding, there are certain startups also which are there in this space which I would like to mention, and these are the names which are there in the small cap as well as the mid cap categories. If you would like to say, the valuations are less than $50 million, and the names include Pixel, Skyroot Aerospace, Satcho, Agnicool Cosmos, as well as Dhruva Space.
Okay, and that's not it. You've got a couple of listed companies as well which have had a fair contribution in the Chandrayaan mission. Sharad, highlight that for us.
Looking at the listed space, it's a very interesting numbers coming in, and of course the Indian Space Association is something which I'd like to point out. There are stocks such as L&T, Walchand Nagar, Bharti Airtel, which are there a part of it, but there are certain stocks also which have been a part of the Chandrayaan missions, in the previous missions as well as the current mission. And if you look at it, L&T, of course, the stock is also trading at its lifetime high levels. They have also provided services throughout the entire processes, and also the stocks such as MTAR Tech and HAL, they have also provided propulsion engines and also various types of components. In the small cap names also, we have Centum Electronics, roughly 300 to 500 odd components coming in for the Indian space mission. And of course, at last, there is also an auto ancillary company, Sundaram Fasteners, where they have actually provided fasteners in the previous launch as well.
Okay. Very interesting, but in terms of a needle moving event, I'm not so sure what the needle moving event is for individual companies. But in terms of a technology prowess, this clearly takes Indian space program right up there. And ISRO, by the way, has done some remarkable engineering work in terms of also using their entire base to launch satellite for other countries. So this, in a sense, what started as an idea then became a mission, and now has become really the envy of the world in terms of achieving a engineering marvel. This is nothing short of an engineering marvel. In terms of implications for listed companies, well, it may not be very large, but in terms of establishing the supremacy and authority of what Indian space missions can do and what ISRO actually can achieve, I think this just takes you on a different kind of a pedestal positioning and also global respect now.
Oh yeah, absolutely. Any contribution is good enough. But let's just move on and let's just track some of the other names which are in focus today. And quite a few of these broader market contenders are sitting at a 52-week high. So look at Poly Medicure, for instance. There is an Investec note as well. They've initiated a buy on this one. Target price put at 1690. They're saying that it's set for a strong earnings trajectory, new therapies, US ramp up. It's going to only drive growth diversification for them. And they plan to expand capacity, strong execution track record, which Investec believes is only going to aid growth for them. Right now, though, the stock has come off quite considerably from the top of the day after hitting that record high. It's now also, tempered down, 0.5% higher is where that it is. Linde India, that's also been a buzz. It's hit a 52-week high once again. It's been awarded a letter of acceptance by Indian Oil Co. for setting up of the air separation unit within its Panipat refinery complex. So that as well is one stock which has been buzzing quite a fair bit. And then Hindalco, which is one amongst the top gainers within the index. They're looking to invest about 2,000 crore rupees to set up a copper and e-waste recycling unit in the country. That's the other stock which is buzzing quite a fair bit, about almost a 3% bump up actually coming in on Hindalco. On that note, we're going to take a very quick break. When we come back, lots more lined up on the other side. But let's talk about food. And Nikunj, on the special series that you kick-started with your interaction with Bajaj Auto and Bharat Forge, eating now on the go, we went also on a food expedition in
I was
Pune.
working. Patricia
you were
was
working
eating.
while Patricia was busy tasting extremely great food to explore all the tastes that define the vibrant city that is Pune. So from traditional Maharashtrian food to iconic bakeries, we kicked off this journey, in fact, with Marzarin, which is one of the oldest cafes in the city. Let's take a look.
Today, we're diving headfirst into the heart and soul of Pune. Known as the Oxford of the East, this city is as diverse as it's vibrant. Let's kick off this food journey at Marzarin, a charming bakery that has been serving delectable treats for generations. This super cool bakery has a history as sweet as its pastries. So let's go on a tasty time travel. So today we have with us Mr. Jamshed Sheriarji, the owner of Marzarin, that is housed in a building that's over 200 years old. Hi, Mr. Jamshed. You know, Marzarin is one of the oldest cafes in the city. What kind of role do you think it has played in the food culture, and how has it evolved over the years?
Well, we are one of the oldest. I presume we must have had some influence with regards to the cafe culture in Pune, as well as to what people expect in terms of a menu for a QSR or a cafe, sandwiches and so on and so forth. My mother initially had started her own cake exhibition when Christmas time. Christmas time actually in Pune used to be very dull back in the 80s.
Okay.
Then me and my mother used to make cake decorations, decorated cakes.
So let's try some of the items on the menu.
Certainly, please.
So tell me something more about what we're going to have today.
We'll be having cold coffee,
Okay.
chutney sandwiches, and our new pizzas.
Okay. So what is in these pizzas?
Our pizzas, again, we make everything else ourselves from the base to basically, other than
From
the
the
cheese.
bread.
From the bread onwards, it's baked daily in our ovens.
Okay.
Freshly made and then made to order in our pizza oven. And it is a very tasty item. We have had very good reviews about it. And we give it at a very reasonable rate. The mini pizzas go for 50 for the veg, and right now 60 for the chicken.
And the cold coffees?
The cold coffee goes for 90, and it's our second most popular item on the menu after our chutney sandwich.
You're right, it is value for money. I mean,
Thank you.
it's 90 rupees these days. You don't get much.
Exactly.
Yeah.
And our chutney sandwiches are at 50 rupees. They are our most popular item by far.
Okay.
And the recipe hasn't changed since we began it in 1965.
The chutney recipe.
It's exactly the same. The cold coffee is exactly the same.
So where does the sweetness come from? Like, do you put sugar in it? Or
That's
is
all
it...
a trade secret. And honestly, it's not that different from a standard pudina chutney recipe,
Yeah.
but there are one, two things that are the secret sauce, so to speak, to the recipe.
So what do people pair the chutney
Generally, they go
sandwich
for
with?
a plate of chutney sandwich and a plate of buttery cheese sandwiches. And they like to double decorate, so they get a bit of cheesy flavor along with the chutney.
So what kind of pizzas do you offer?
We basically have two varieties. It's all a mini.
Wanna
We
try?
are a fast food QSR. So we try to ensure we only have two items actually on the menu, mini veg and mini chicken. But if customer wants some additional topping in terms of more chili or more oregano, we can give that to them as well.
So if we had to take some things back to Bombay, what would you recommend?
To Bombay,
Yeah.
I would just suggest, well, I wouldn't recommend the sandwiches. We generally don't recommend people traveling too long if they don't have a refrigeration or something of that nature. So most people go for our plain cakes like chocolate chip cake or plum cake, or some of our macaroons or cookies, as well as our biscuits. And of course, they can always pack a cold coffee on the way, so to speak.
Thank you so much. This has been a treat.
Thank you so much.
The sandwiches were great. The pizza is yum. And the cold coffee, I think, is the highlight.
Thank you so much.
Thank you.
Appreciate it.
Back for closing trades right here on ET Now. Still just about consolidating, hovering around that 19,440, 19,500 odd kind of range for us. SunTV, Federal Bank, RBL as well has jumped up in trade. In fact, banks are making a meaningful comeback after many days of underperformance. So even amidst the large caps, you have an Axis, SBI, ICICI Bank, they're all perking up and sitting at the session highs. But a couple of stocks are getting beaten down as well. And market watchdog SEBI, remember, has released a second interim order into Brightcom Group's preferential allotment issue. In fact, my colleague Ankur Mishra joins in with all the latest here. Ankur?
Yes, it is first time that a regulator has issued an order in the same matter 2 times, and this interim order was earlier issued 3 to 4 months back, and now once again the regulator has prohibited CEO as well as CFO from holding any position in any of the listed companies, and this is done because there has been alleged irregularities by the reporting which has been done by the company. In fact, the responses which were given by the company still does not satisfy the regulator, and there is a prima facie findings that wrongdoing has been done as far as the reporting of financials by the company, and there is a problem in the allotment of shares as far as preferential allotment is concerned. Now, these are not the only persons who are affected by the order. Shankar Sharma is also one of the person who is named in the order, and he is also prohibited from selling the company shares till the time this order is disposed of. In a response to interim order, both company as well as Shankar Sharma has said that they have seen the order, and in fact Shankar Sharma has specifically mentioned in a social media handle that they have submitted the responses to the regulator and awaiting the legal due course in time.
Right, Ankur, thanks a lot for that. Bharat Forge is the other one which has done exceptionally well. Mind we interacted with the management, and they're indicating to us that the cyclical recovery in the business, or the cyclical nature of the business, seems to be changing. They're moving into defense and things are looking up. So Deep, at 1,000 rupees, do you think markets are already pricing in this turnaround of business, this expansion of Bharat Forge into defense and aviation?
Not yet, Kunj. In fact, I think last or couple of interactions back, I had mentioned on your channel that instead of chasing the traditional defense names, which are fantastic companies, they have appreciated really well and have rewarded the shareholders. This is the time to probably look at other pockets, and Bharat Forge definitely comes out there. They have a defense business inside the company. We only talk about US larger truck demand when we talk about Bharat Forge performance. While that also has been improving, we probably miss the defense part, and because there is so much of excitement on defense sector in India, and Make in India and defense is a reality, we should look at Bharat Forge also as a defense play, amongst others as a defense play, and accordingly try and value Bharat Forge. So on that parameter, Bharat Forge does stand out, and the overall performance of the company is increasing. And I would probably recommend an investor to even buy Bharat Forge at current level. Remember, they need to hold it for some time. It's not that they should immediately expect massive appreciation, but it's a long-term good story. The controversy around Haikal and all that is just a sideshow. It doesn't affect Bharat Forge as such. So no need to get perturbed with the kind of controversy surrounding Haikal and the fight between Bharat Forge promoters and the Haikal promoters.
Right. Okay, Sudeep, great to have you on the show. Glad as always that you could take time out and join in. Look out for what's happening on SunTV because that's really on a tear, 5% higher. There was a Motilal Oswal note earlier today, recommending a buy rating on the stock with a target price of 630, 569 is where the stock is. So still pretty much a fair amount of upside in the stock is what the note is indicating. They're saying that they are looking at higher PE in terms of FY25 multiple. They're saying that, they're pretty, upbeat about the valuation for the new IPL team at the recently concluded auction, and that makes the stock valuation pretty compelling as well. But that said, let's get some closing trades as well going. Kunal, on your list?
So Havells is something which looks attractive. The stock is at 1340 odd mark and it's now on the verge of breakout of a huge pennant formation which has been going on since the last 2 years for the stock. So that's a stock which you look to buy.
Okay, on that note, we're going to take a quick break. When we come back, the last half an hour of today's trade.
Almost 20 minutes of trade left, and this again is just one of those days where markets have just practically did nothing. Started flat, gained some elevation, not trading with any kind of force and gusto. The small and the mid-cap index, meanwhile, they continue to outperform, and that I think is the most heartening feature. But will this outperformance continue? Mantesh joined just now. Let's connect with him. Mantesh, this market is lacking leadership. Banks are down, IT is not going anywhere, Reliance is stuck in a range. Yet on a daily basis, mid and small cap stocks, they continue to go higher. What does that indicate? Is this market getting euphoric, or it's a matter of time large cap stocks will reverse also?
I think large cap stocks will start reversing. This is the start of the first year post-COVID where there will be no base effect to really worry about. This will be the year when there will be quite a few capex plans either accelerated or new capex plans being formed, because we had a period of COVID when such plans didn't materialize. So therefore, the large caps will start getting re-energized as I see it. And you mentioned a few names. Some of the stocks have started really doing well. The larger ones, we have seen HDFC lead with a merger process, which will take its own time for really to start moving. But the point I'm making here is that you have had large companies going in through some form of M&A activity, HDFC Bank and HDFC Limited, Reliance, the demerger of Geo Financials. You have ICICI Bank actually wanting to get ISEC into itself. So such moves in terms of M&A activities weren't seen in the past among large caps. To me, not just capex moves, these M&A activities will also see accelerated kind of activity and can create value for investors ahead.
Okay. So in terms of trigger now, what is next? Because earnings are over. We've also heard from Fed. We don't have a big trigger coming in way of the inflation differential now. So what to your mind is the big trigger now?
I think the big trigger now is that corporates will start looking at better performance ahead. I think you did mention about inflation, but one of the biggest inflation trigger is on the commodity side. Many of the companies, be it on the industrial side, be it on the capital goods sides, are exposed to a large inflation footprint that came in with the commodities surging. That footprint is now gradually abating, and that could provide the next possible trigger for most of the goods manufacturing company. While on the services side, we might potentially see a revival in demand. Now, revival in demand will come through the mechanism of more capex coming in, therefore more jobs getting created, or you possibly will see RBI winning over the inflation battle. Now, for the past 2 months, it's been a little problematic, but over a steady period of time with interest rates having risen to near peak, somewhere the inflation battle will start, and the RBI will start winning the inflation battle. So to me, primarily inflation, commodity inflation are the ones that will provide the trigger ahead. And with like I said, capex coming in services sector, we should be able to see a demand revival soon.
Right. Okay. Just looking at the market texture, while of course the broader markets continue to hold robust, SunTV is one name which is of course perking up a good 5% as we speak right now. Just wanted to get your sense, Mahantesh, on what you make of the SunTV story. I mean, there was one of the brokerages which is saying that even while ad revenues are falling, they're pretty, betting big on the festival season demand and revival coming in from there. And then, of course, they're pretty hopeful about the recent round of IPL auctions as well, because that's one part of Sun TV business as well. What do you make of the story, though?
Comment on Sun, because there is an overhang in terms of the past excesses that exist within Sun TV. So really can't comment on it.
Sure. Okay, let's take it across to Sharad. Perhaps he has some info on what's happening with Sun TV, and he's been picking up some dealing room chatter. Sharad, what's the cover there?
Well, yes, in focus, we're having Sun TV networks, and what we are hearing from the dealers is that there are certain counters are seeing buying coming from DIs, which is the domestic institutions. And importantly, even the volumes have risen almost 4 times its 20-day average. The stock hit its 52-week high levels in the day trade. And also, this has risen the most in almost a year on an intraday basis. Apart from this, looking at the valuations front, it is still coming at a 20% discount from its 2021 high levels. And on a 12-month forward basis, the P ratio stands at roughly 11.7 times. Already the DIs which are already invested in the company include the likes of Kotak Mutual Fund and ICICI Pru Mutual Fund. And recently the numbers had also come, and Q1 numbers were largely weak set of numbers, especially because of higher operating costs. But the triggers going ahead, at least in the medium term, include that a festive demand is expected to aid the subscription revenue going ahead. And also important thing is that the ongoing conservative approach is there in the investment to OT2, where the investments might be less, which might actually help the return ratios going ahead forward. Apart from this, the brokerages are still upbeat, especially on the dividend potential of the stock, which will give the returns to the shareholders.
Mantesh, time and again we've seen power sector gets energized. It has happened again. This time the view is that it's going to be demand, it is going to be realization for thermal companies, and it is going to be this entire power capex. How realistic are the gains in power stocks this time?
I think over the past several years, you would have noticed that the generally the PLF levels for, and particularly the thermal plants, has been lackluster. In fact, they've been dipping for certain older plants. There was a move sometime back actually to, from an environmental point of view, to retire older set of power plants. While that has not formally concrete, we are way behind in terms of retiring those old power plants. If and when that happens, you will see a situation where power generation, particularly on the generation side, you will see increased appetite coming in, both in terms of capex and investors also getting gung-ho related to that. As far as overall demand is concerned, you would also notice that in the earlier years, we used to have a big shortfall on peak demand. We would have a lot of load shedding. That means unmet demand that used to be existing in the power sector. Now we have reached a situation where the gradual growth in demand is catching up with the capacity availability, and therefore there is a dire need for new capacity to come in. This is where some of the traditional thermal power plants can step into the picture, because we have seen on the renewable energy side, while there is constant growth in terms of capex, the availability factor for renewables, particularly on the solar side, is pretty poor. You need to have solid base load providing plants, and which can come only through the thermal power plants. So this whole move of retiring old plants and the unmet demand, which has kind of narrowed down to nearly zero, would lead to better growth ahead for power generation companies. Accompanying that, we would see such moves as such as price increases, better efficiencies coming in. We are now getting certain reform activities going through on the distribution side, particularly the last mile distribution side, where you will have probably prepaid meters coming in. All this will lead to better commercialization of power and better realization at the same level of power output. So the sector is probably looking a little better.
Sure. Mantesh, what are the other pockets of undervaluation right now in the markets? Any opportunities that you're scouting or spotting right now?
Actually, healthcare, and particularly on the hospital side, uh, I believe while the existing listed companies are tending to be a little overvalued, there is immense growth that is happening. Immense growth potential exists, and that growth is coming from private equity to large hospitals, both from which are coming from abroad, that is hospital operators situated abroad, to even certain local hospital networks. So there is a great move that is happening in the healthcare sector. I believe there we will see huge amount of capacity addition. Look at any of the listed entities, and everybody talks about raising their bed capacity. Everybody is also on the lookout for any capacity to grab that is acquired. This tells me that the hospital sector will really start doing well. Mind you, our realization in terms of on the hospital sector side are pretty low relative to global standards. And now we have healthcare penetration coming in through health insurance. That penetration is gradually growing such that more and more people are able to afford better healthcare, better hospitals, and that's good news. That's for the healthcare industry per se.
Okay. You know what? The two stocks that I want to bring up are Torrent Pharma as well as Cipla. Remember now, reports are indicating that Torrent actually is in the foray to buy Cipla's promoter stake. That's Yusuf Hamid's stake. Now, Antique has come out with an interesting note. They're saying that the deal is actually going to be negative for Torrent Pharma. They're saying Cipla's business is margin dilutive to the TRP. They have higher exposure to US and low margin ROW as well as the Saga business. Cipla's plans for US business are under FDA issues. Both Goa and Indore have WL as well as OAI status respectively. And even Torrent has both its critical plans under WL. So they're saying that although Torrent will add about $750 million to its annual revenues from US, it remains to be seen if any changes in the settlement to generic Revlimid, which can impact Cipla's US market share agreement, are going to get fruitful or not. Nikunj, just wanted to reiterate your thoughts on if at all, this deal fructifies, and if Torrent does acquire the promoter stake, that's the Hamid family stake in Cipla, what would it mean for minority shareholders of both the companies?
See, if you're a minority shareholder of Cipla, the first thing is that if the promoter family decides to exit, if they do, we don't know. We hear that, again, this is something which media has been reporting, that the promoters are looking at selling stake because there is no clear line of succession there. So you try and put two and two together. There is going to be a bidding war. Assets like Cipla, they come once in a lifetime, not very, and a company of assets like Cipla and a company of that kind of an caliber and that kind of an accounting practice, these companies don't come on the block, again and again. Having said that, Torrent in the past has a history of acquiring assets. They've used their balance sheet, they've ring-fenced their balance sheet, and they've acquired. And they've done a reasonable job, unlike a lot of other pharma companies like Sun and Ranbaxy and other pharma companies like Mylan and other companies where they failed to scale it up. Pharma is a very complicated business to understand. Now, if Torrent goes ahead with it, of course, they'll have to raise debt. Would they be looking at acquiring Cipla in the private entity? Would they be looking at acquiring Cipla in the public space? Would they be only interested in bidding for some part of Cipla? We don't know. We've not heard anything from Cipla. We've not heard anything from Torrent. But in the near term, I think Torrent Pharma could remain potentially under pressure if the balance sheet of Torrent Pharma gets diluted, because the stake sale in Cipla will lead to an open offer. And since there is going to be a price war because one PE investor along with the consortium is ready to they've already expressed their EOI, they've already filed an EOI. I guess it's not going to be a cheap deal. It's going to be a deal where markets will have to, or the buyer will have to pay some degree of premium. So it would be an acquisition where they will have to raise a lot of debt, and how are they able to ring fence it going forward with the existing cash flow needs to be seen.
Yeah, absolutely. Although right now the stocks are under pressure. In fact, actually from the word go, Torrent Pharma has been lower. Right now pretty much at the session lows, down about almost 2% as we speak. And let's just revisit what Cipla as well is up to right now in trade. Cipla though is marginally holding out 0.7% or so. But let's move on and, let's get in some BTST trades as well going before we wind up for the day. Vinay, wanted to get your buy today, sell tomorrow list.
Yeah, so I would go long in the Canara Bank. So PSU banking space has been outperforming today, and primary trend was already up. So I see a strength in today's trade, and after running correction, it has started performing well. So Canara Bank one can go long as a trading. 332 is the current rate around which one can go long. 326 should be the stop loss, and on the upside we can expect a target of 345. And second pick I would pick is the Larsen and Toubro. So it has given a breakout from the consolidation which was there for last 2 weeks, and it is showing strength. So considering that around 2720, one can go long with keeping a stop loss at 2650. On the upside, we can expect a target of 2800.
Right, okay. Kunal, what about your BTST list?
I'll go back to buy calls. RBL Bank as a buy. The stock finding its mojo back, trading about 225 mark. So 240 as a target for RBL Bank, stop loss at 220. And the second would be a buy on Voltas. That stock has also very subtly doing pretty well, trading about 825 mark. Buy with a target of 868, stop loss at 821.
Okay, those are some of the active trades currently in trade, as is SunTV, Federal Bank, RBL Bank, HAL, as well as Crompton. But the Adani Group names are, collapsing quite a bit. Look at Adani Enterprises, that's fallen nearly about 5% in trade right now. Adani Ports down 3%, ACC, Ambuja, and the drop has really come in the last few odd minutes or so. So let's see where this weakness actually persists or where it actually stalls. But banks, they clearly seem to be the one strong mover in today's trading session. In fact, they're the top sectoral winners as well. Mantesh, after Q1, really you saw stark amount of underperformance from the entire banking pack, right? Because you did see NIMs peaking out and topping out. But do you now believe that at least when it comes to the stocks, the price damage could be behind us and well digested?
Yeah, I think the price damage is kind of well digested. The good thing to look forward to now for the banking sector is a revival in the credit growth. Not just revival, actually credit growth will start posting hitherto never seen kind of growth. Probably the growth rate will be in excess of 15% or thereabout. Along with credit growth, one has to be a little careful because the banks have actually reached the bottom of the sort of NPA cycle. NPA will start reviving, but to my mind, whenever banks grow strongly when it comes to credit growth, much of the evils linked to NPA worries or NPAs is kind of forgotten because suddenly a high amount of credit growth adds to the book value for any bank. Now, primarily from a market standpoint of view, you necessarily look at what is the kind of book value growth. It comes from better NIMs, it comes from credit growth, it comes from lower NPA costs. Now, of these three elements, if credit growth is going to be quite strong, the accretion to the book value will be quite stellar. If that's the case, I would be very gung-ho about the banks per se, because we will see probably a high credit growth, which we have not seen for the past 7-8 years, kind of now.
Okay. But banks have underperformed. That is the bottom line. So Mandesh, I'm going to go back to that point again. Everybody knows banks are doing well. Everybody knows banks will do well. And that is the consensus both in terms of compulsion and a universal buy. Is this consensus which is bother? Do you think markets are pricing in FY25 and FY26 upsides? So companies, the banks will do well, but what may look like a great sector may not give great returns.
No, let's look at it this way as well. Okay, banks primarily operate in the Indian markets, but some of the banks have global exposures. And you would have noticed past decade, why past decade? Past 2 decades, they have not really done anything globally in terms of their lending business. In fact, if at all, most of them have actually contracted their businesses out there. So I see a lot of these banks now trying to become a little bold, getting into the global markets and upping their game there. The global spreads, the NIMs that we normally see in India versus the global NIM spreads, the global NIM spreads are actually rising right now, unlike the contraction that we are potentially seeing here. So there's a great opportunity for many of the banks. Plus, you should understand as the economy recovers, particularly on the industrial side, particularly on the capex side, there will be a large expansion in the working capital requirement. And most of the times, working capital is funded by banks. Working capital is not typically an NBFC funded thing. Working capital is not something promoters like to fund themselves, so that being the case, most of these banks will be able to do quite better ahead. So I don't know, when you say FY25, FY26, are those numbers getting factored in right now? To me, the book value accretion by credit growth is going to be quite large. Not coming through NIM expansion, not coming through NPA contraction, but pure credit growth, which is like volume growth, right? For any other industry, the simplest way to understand this is volume growth. A large volume growth leads to an operating leverage as well. So banks also have an element of operating leverage. Their fixed costs generally remain the same over a period of time. That said, I think the bank valuations are still pretty decent. You just look at HDFC Bank; it's a rank underperformer, right? The largest private sector bank, and its valuation peaks used to be like 5 multiples. We are nowhere close to that kind of money. I'm citing this just as an example. And over a period of time, we have also seen structurally on the public sector side, a lot of banks getting consolidated into just a fewer set of banks. Half a dozen, a little more than half a dozen kind of public sector banks are really relevant. That being the case, to me, this whole consolidation, the growth on the international side, and the working capital needs being met by banks should trigger a large book value expansion for most of the banks.
Let's just quickly bring up the stock price of Paytm because it's seeing a very, very sharp spike. That stock will just come up for you on your screens. Look at that spike on the stock, 6.5% higher right now, 912 on Paytm as we speak. In terms of key events for tomorrow, not a whole lot. Of course, you've got the US initial jobless claims. You've got the S&P Global Manufacturing Services and the Composite PMI. That data will come out today itself. US crude oil inventories, that's also going to be important to talk. But in terms of India events, yep, nothing much. Of course, this evening, you've got the Chandrayaan 3 landing, which is lined up. Some primary market action, though. You've got Aeroflux Industries, that's going to close for subscription, the IPO that is. And then from tomorrow, you'll have Vishnu Prakash, our Punglia IPO, which is actually going to open. Couple of important AGMs, Bharti, J&K Bank, which has been very active of late, and a Vedant Fashions. That's something that we're going to closely monitor. But I think the big event, of course, is on Friday when the US central bankers who are meeting currently at their annual Jackson Hole gathering in Wyoming, you will hear from the Fed chair. He's going to actually come out with his speech. So that's going to be an important trigger from a market perspective. Some more strength in the currency, 82.70 now on the rupee as against the US greenback. But Mahantesh Kunal, thank you so much for taking the time out and joining in right now. Let's begin winding up for the day, and pretty quiet to close. Yes, in the green, and yes, banks have actually made a recovery. So while we're closing sufficiently above the 19,400 print, and you've got really banks which have done the trick for us today. Axis, ICICI Bank, SBI, Kotak, they've all managed a green close. RBL as well held out well. Federal Bank also saw a good 4% off a move. Amidst the underperformance, that was clearly from the Adani names. Adani Ports, Adani Enterprises at the bottom of the rung. ITC was down about 1%. Bharti, Tata Motors, Techm, M&M, ONGC, these were some of the rank underperformers in the session. But within the broader end of the market, it was SunTV all the way. There was Hindustan Aeronautics, which held out by almost 4%, and then Crompton, which also saw a gain of about 4% in trade. Torum Pharma, that's closed in lower by about 2.25%, and United Spirits as well, down about 2% as we wind up for the day. But let's see what sort of cues we pick up tomorrow morning and where we go from there. We'll catch you with all the market action tomorrow morning at 8 a.m.